Very good afternoon, everyone, and welcome to NITYA's new series on mastering the art of classification of goods. So this is a series where we will cover the classification of goods under various laws, customs, and GST. And I understand that there is a lot of concern almost every industry has about classification of goods, whether it is on the import side or whether domestic, because even for GST, the same classification is applicable. This will be a series wherein we will cover various facets of classification of goods. So, the criticality can be understood from the registration. We have had such immense response. So many people have registered, and we have, at the time of registration itself, have received a lot of queries. Unfortunately, some of those queries pertain to services. So in this series, we will stick to goods because services is altogether a separate topic, and we will cover it separately. Maybe in future, we'll have a series on that as well. But at this point, we will begin with goods. And in today's webinar, I will be covering some basic facets, basic aspects of classification as to what are the objectives of classification, why classification is so important, what are the implications if you go wrong in your classification, how do you read the HSN, the harmonized system of nomenclature, the tariff, etc. How do you read it? What are the methodologies to determine the appropriate classification? And last, we will discuss the way forward, and then followed by question answer round. So I think that will serve the purpose. And the queries that we have received, some of the questions I can tell you upfront are very, very specific to a particular industry. Maybe it is your pain point, and I can understand that concern. But having said that, those are very, very specific. So we will require greater detail, because classification cannot be addressed unless it is a simple or a direct question pertaining to how to do something, then it's one thing. But if you have a specific product in mind and you want to understand, so that classification needs to be looked into. There are various facets. I will discuss some of those aspects, and you will realize that it cannot be answered, in the question answer round like that. Okay, it may require a little more time, and we can do that one-to-one. You can reach out to us anytime. So, of course, I will take up your question and I'll address that at the end of it. So, coming to the various objectives of classification, why classification is so pertinent? Number one, as we understand, there is a background I'll give you that, there was a time when India didn't have the HSN code. Okay, and there were 68 tariff items in which the entire classification or the entire products were divided. And TI 68, as we used to call it, tariff item 68, was a residual item where if the goods were not classified in the first 67, then we used to classify under 68. Then India became signatory of GATT, the General Agreement on Tariffs and Trade. The World Trade Organization was formed in 1988. They started collating the data internationally so that a uniform standard can be practiced and followed across the globe. So now, as on date, more than 200 countries follow HSN. Okay, and it's a standard international system where you will find a lot of material, and then it helps in determination of the tariff, your precise classification, determining the rate, etc. So it is very, very critical, because to understand what is the rate on the import of goods or on the domestic GST, you first need to determine what is your tariff classification. And once you have determined the tariff or the entry or the tariff item where your product gets classified, then you can go into the rate. You can determine the rate. So determination of rate of tax, whether on import side, basic customs duty, very critical. Also, IGST is payable on import, and that is equivalent to the GST payable domestically. Now, the question is, if you go to the rate notification explanation 3 and explanation 4 of the GST rate notification, they take you back to the Customs Tariff Act. They tell that all the classification under GST will be as per the HSN, the first schedule of Customs Tariff Act, and all the general rules of interpretation for the tariff, Customs Tariff Act, those would be applicable for the purpose of GST also. Also, all the section notes, chapter notes, tariff headings, etc., as given in the first schedule of Customs Tariff Act, the same would apply to GST classification also. So eventually, whether you're talking of import, whether you talk of domestic, supply of goods, etc., tariff determination and rate of tax is critical. Then, there are products which are eligible for exemption, whether on import side or domestic. Again, to be on safe side and understand that whether or not you are eligible, you need to understand your eligibility based on the tariff determination. Again, there will be, like we have the free trade agreements with various countries, whether they are bilateral or they are multilateral, like ASEAN or SAF. So all those again are governed once you understand what is your tariff determination and you see whether there is a preferential treatment given or not. You can apply that and you can get that benefit. Last but not the least, or rather, this is the second last. Also, there are benefits under the foreign trade policy. So whether or not you are eligible for, say, advance authorization or for EPCG or for any other benefit under the foreign trade policy, then road tap, etc., you again need to go back and check your tariff determination and rate of tax, etc. So this becomes critical even from that perspective. And last but not the least, if your classification is correct, you are paying your taxes correctly, then you mitigate your litigation for future. So as the saying goes, yes, it is painful and it is costly to comply, but try being non-compliant and you will realize that the cost is far more, the pain will multiply several times. So therefore it is pertinent that you are on right side of the law. You determine your tariff and the classification correctly, determine the rate of tax payable, and claim the appropriate eligible exemption, etc. Because the burden of proof for claiming exemptions lies on the person who claims. So if you as taxpayer are claiming any exemption, then you must be 100% sure that yes, you are eligible for it. Otherwise, later, if you have to pay back, it will be very dangerous. So I come to, okay, if your classification goes wrong, then what are the implications? And this also again throws light on why it is so pertinent that you should correctly determine the classification. So first is that you avoid unwarranted litigation, or it may so happen that because of wrong classification, you end up paying more taxes, and then you will realize it much later. By that time, your refund claims could get time barred. You may face the unjust enrichment issues. So from both sides, whether you have short paid tax or excess paid tax, etc., this is very critical. Also, the unforeseen liabilities and cash outflow. I mean, this is very obvious. If your taxes you cannot determine upfront, then you will end up facing either liability or you will have excess cash flow issues. So this impacts your competitiveness at the end of the day, because you will not, your product could be more expensive, or therefore you are not competitive in the market. It impacts your ITC eligibility. If you are importing the goods, then IGST is applicable, and that IGST rate then decides whatever IGST you pay, your ITC is decided. Also in domestic market, if your vendor is supplying to you, your eligibility to avail tax, ITC, and if you are supplying to a customer, then customer should be eligible for ITC. So that ITC eligibility again gets impacted if your classification is not correct, because we know that the eligibility to claim ITC comes from Section 16. There are conditions prescribed under the GST Act, Section 16, but then there are block credits under Section 17. So whether your product by wrong classification can go under Section 17, you have refunds under Section 54 for export, etc., or for inverted duty structure. So those also need to be seen, and what are the accumulated credits or input side output stage. So all that you have to see, and ITC eligibility again is a question mark there. Then you have, if there is a wrong classification, the department would invariably invoke confiscation of goods which have been wrongly classified, and this is over and above the differential tax demand that is there. So there also you have to be very, very careful and conscious, because your goods can get confiscated, or they may seize the goods, they may not release the goods, and you may have business disruptions because of this. Okay, so last again, as I said, this has impact on your claim for refund, your exemptions, your free trade agreement related, eligibilities, your foreign trade policy benefits. So all of these are directly linked to your classification. And classification of goods or services we are not covering in this series, but this is very, very critical for any business. Without that, the business itself can get distracted or hampered. So we now with this, and we knew that this is going to be a very big topic, and industry is going to be getting impacted. And that, as I mentioned, that the registrations, the number of the response that we got, and the large number in which participation is there, that this is a pain point for almost every business. So we have run a poll. You will have a live poll right now where we have asked a question. You will have 30 seconds to respond to it. This is just to see that whether this is an issue for you or it is not an issue. So here we are launching the poll. So the question is, have you ever faced any issue regarding classification of goods? So please respond by yes or no. If you have ever faced any issue regarding classification, please do respond. Okay, so we have the poll answers. So I can tell you that a large number, significant number, 83% of the answers say yes, they have faced issues on regarding classification of goods. And only 17% people, I would say you are very fortunate. Probably you have already undertaken good exercise in determining classification, or you are not dealing in goods, so this classification does not impact you, whichever ways. But only 17% are not impacted by, have not been served any notices, etc., from department on classification. But large number, majority, 83% is impacted. So you can see how important this topic is, how it is going to impact you. Okay, so now we come to how to read the HSN. So reading HSN is very, very critical. Now I come to, we have the first schedule to the Customs Tariff Act. Okay, then there are general rules of interpretation which are given. The tariff is divided in 21 sections and 98 chapters, and this is very scientifically devised tariff. It very systematically divides the goods, all the goods that you can think of, in 21 sections, and within each section there will be multiple chapters. So 98 chapters. Chapter 99 in fact deals with services, and that we are not covering. So 99, whatever the service related issues are, those classifications some other webinar maybe. And in this series also today we are only going to, as I mentioned, cover only the overview. Okay, there will be specific, I've received a lot of queries relating to automobile sector. Believe me, we will have a separate complete webinar which will focus on automobile sector. Okay, so a lot of your queries and everything will get addressed. But in this particular today's session, I just we thought that we will share the overview of what classification is and how to read HSN. So as I've already covered. So now we come to the first schedule, how, and this is just to give you a look and feel of how the tariff looks like. So what you will see, there will be a section. So there will be section 1 in which there is chapter 1, and within chapter 1 you will find there are what you call the on top the heading tariff item, and there is a 4-digit, 6-digit, 8-digit different numbers are mentioned. You have column 2, which is the description of goods. You have column 3 for unit, column 4 and 5 for rate of duty. Okay, so column 4 prescribes the standard rate and column 5 prescribes the preferential rate. So 4-digit level of this tariff item, this is called as the heading. Okay, So chapter 101, section 1, chapter 1, and then 4-digit level is a heading. When you go to the 6-digit, it is called a subheading. And if you can see the red highlight, these are the 6-digit items. These are subheadings. And if you see 8-digit level, these are tariff items. So you can see here tariff items. So if I were to just explain to you, and we will go further down, how the 4-digit, 6-digit, and 8-digit are. You will also find that before these description of goods, you will find some dash mentioned. Single dash, double dash, triple dash. There can be 4 dashes also. We'll come to this. Okay. So in this case, the heading, chapter heading as we call it, this is live horses, asses, mules, and hinnies. So this is how it is, and then it talks about single dash horses, purebred breeding animals, then other, which is a subheading, and within subheading you have horses for polo. Okay, that's a specific category that for sporting purpose, horses for polo. And you have a residual category other, which is not for polo, but there are others. And likewise, you have single dash asses, you have purebred breeding animals, you have livestock, you have other. Then you have the residual subheading other. What is not falling in the first two subheadings, you have to see here. And then again, you have to see mules, hinnies, or as livestock, and then residual other. Okay. So if we see, the single dash signifies a group. Okay. That's a group under which there will be further subgroups. So like horses and asses is a group. Okay. Then we have double dash. Double dash is a subgroup. So as we can see, purebred breeding animal and other, these are double dashes and subgroups. Likewise, there is a subgroup other, which is a residual category. Then you will have 3 dashes also, triple dash. Okay, and this is sub classification. So again, you can see horses for polo, other, and so we have put them like this. There can be 4 dashes also. That's further division. Okay, so it goes up to 8-digit. At least in India, we have till 8-digit. In US, you will find 10-digit HSN. So depending on country to country, this also varies. But predominantly, the first 6-digit are common everywhere. Okay. Then what you will find in column 3 is the unit. We earlier saw the unit. Earlier, I will go back and show you. The earlier unit was unit. I mean, a horse or a ass, they have to be in numbers, a unit, 1, 2, 10, whatever. They cannot be in kgs. Okay. So likewise, depending on what the product you are dealing with, for instance, we are dealing now, this example here is a potatoes, fresh or chilled, tomatoes. Oh, tomatoes are in, a lot of news this time at this point. Okay. Onions, etc. So all these are in kg, because that is how that is the unit in which they are traded or dealt in the commercial world. So unit is to facilitate the collection, comparison, and analysis of the trade statistics. Now, globally, if you are following a particular HSN and you are trading in a specified unit, then the data is collated and it is seen that globally, what is the trade, how much of contribution India is making, how much is the export, how much is the import compared to the world over, where we stand. Are we growing compared to previous year and compared to the global market, and where we stand? So this helps in determining that. You also find rate. Rate is typically ad valorem. Okay, you find that the percentage is there. In few cases, you will also find it a specific rate. It could be typical rate, like for especially for petroleum products, or for products like say gold, etc., or for products like marble. You may find some specific rates also. Okay, and then the preferential area is mentioned. So what it means is that they have specified certain areas. If you import from there, the standard rate itself becomes what is mentioned in column 5. But if the area is not there, or this entry in column 5 is dash, as we saw in case of horses, etc., then we have to follow 4. 4 becomes the standard rate. So I'll go back to show you how if you see here, the preferential area and rate is dash. That means you have to follow what is in 4. That is the standard rate. Okay. So next we see what is the methodology? How do you determine the appropriate classification? Now, here comes the help. There is a general rules of interpretation, and these help in uniformity and consistency in classifying goods across the globe. Okay, when I said 200 plus countries, we are talking of global here, and they help in comparable collection of trade statistics, as I mentioned. So what is rule 1? Rule 1 is very, very simple. It says the title is only for ease of reference. So there is a title in the section name. There is a title in the chapter name. Those are only for ease of reference. What is relevant for classification? You have to determine based on the terms of heading. So heading, as I mentioned, 4-digit level. What is the term of that heading? As we saw, horses, asses, mules, etc. Okay, so that is the heading. Then you have to see section and chapter notes. So there is a section note, there is a chapter note. You have to go to that section note and chapter note, and they tell you what is what will get covered in that section or in that chapter. And so the same has to be followed, provided in some cases the heading itself gives a specific or the section note, chapter note itself give a specific this thing that they deem certain things, and these can be country specific. India may have certain specific notes for its purpose, and where they deem certain things, and then the general rules of interpretation are not applicable. So wherever such deeming fiction comes. Okay, rule 2. And you'll find a lot of classification going by rule 2. So first you have to apply rule 1. What are the terms of your heading? You have to see which chapter or section note and chapter note is there. You have to see the tariff, and probably you'll reach near to where you are, what your product is, with which you are concerned with, whether for import or for domestic. But then there is a concept of something called rule 2A, which talks about that incomplete or unfinished article, which has the essential characteristic of the complete or finished article, shall be classified like the finished article. So a finished article, and I can give you example also for this. So a finished article is classifiable under a particular tariff item and at a particular rate. And assume for a minute that you have an incomplete or unfinished article, but it as presented, and everywhere the terms should be seen that the goods should be classified as presented before the proper officer of customs. Or if you are making a sale, that in what form and shape you are making sale or supply of that goods, or you are purchasing those goods. So that is the form and shape in which you are dealing with. You are not completing. You may undertake activity on the very product later to make it finished. So for instance, incomplete, unfinished, how do you say? There can be situations, or let me first deal with the unassembled and disassembled also. So what happens is, sometimes for the purpose of transportation, for ease of packaging, etc., certain goods, or for business reasons, certain goods come in unassembled or disassembled form. Okay, and post their import or post their purchase, sale, etc., then they are assembled or so as to make a complete unit. So such articles also get classified as a complete article only. But there are certain provisos, provided that such assembly should be simple. It should be through, say, screws, nuts, bolts, etc., or riveting, or welding. But it cannot have extensive process where engineers are involved, extensive assembly or manufacturing is involved. So that is not permitted. So I'll give you a few examples. So there was a case of, say, Sony India. So Sony India was importing components for color TV. Okay, Now, what the department did, they clubbed 96 different consignments which were imported at different ports at different points in time, and said that this is what Sony India imported is a color TV. Okay, this is in unassembled, disassembled form, and it should be classified as a color TV, and duty of color TV should be paid. Components were at lower rate. What Supreme Court held is that it is not as presented. As presented, number one, these are at different ports, different points in time. Okay, they are not presented together. Secondly, there were various critical components that were required to complete the TV, and there was a complete process required to assemble all those parts, and then only a TV will come into existence. It was not a normal process. So Supreme Court struck down the classification as color TV. Okay. Likewise, there is another case. There was a Phoenix case where shoes, uppers and the soles were imported. Assume that 5,000 soles and 5,000 their uppers are being imported. All they require is pasting. So the moment pasting is done, you have a complete shoes. So Supreme Court in that case held that yes, these are unassembled, disassembled form. These are incomplete, unfinished shape. You can easily paste them, and shoes will be there. So it should be classified like a shoes. Bicycles typically, they are coming in, unassembled form, and you have the tires, etc., coming separately, and the body is coming, and the saddle, which is the seat, is separate. So, and if you see the bicycle seller, he just finishes the bicycle in half an hour or whatever by just putting whatever nuts, bolts, etc., and the tire tube and whatever, and that is how that becomes complete. But the kit in which it comes, that is classifiable because it has the essential character of a bicycle. It gets classified as a bicycle. So that's how the classification or this these Rule 2A needs to be interpreted. Now, Rule 2B talks about the mixture or combination. So mixture or combination could be for multiple reasons. There can be more than two products together, or it can be a set of products that can be sold. So in such cases, we have to go to Rule 3. And what, the complexity of assembly, as I mentioned for Rule 2A, needs to be looked into, then presented at different times has a meaning. Then there are parameters for essential character. Yes, this is very critical. We have the functional tax functionality. What is the function that they are going to perform? Are they capable of performing that function, what is presented, or they are incapable? They cannot perform when put together or when seen. Some critical components could be missing, and therefore functionality cannot be there. Or value addition test needs to be gone into. Or the commercial test means the common parlance or the trade parlance test. How the trade perceives it, how the people who deal in that particular product or article, they treat it. So all these tests need to be applied. So what Rule 3 talks about? Rule 3 has three components. The first rule says 3A, that the most specific description shall be preferred over a general description. So here I can give you an example. For instance, car seats. There is a chapter 94 which deals with seats, including car seats. But there is chapter 87 which deals with car, and and it deals with parts and accessories of car also. So a car without a seat, you cannot drive. So it's an essential component. It says, and that seat is specially designed so solely principally for car. But having said that, because there is a specific chapter dealing with seats and includes car seats, the specific description will prevail. Okay. And I can go on. I mean, mats, car mats also for that matter. There are multiple such cases. So then we have the Rule 3B, which deals with, which says that if, and these are, you have to follow sequentially. If Rule 3A is not applicable, then you have to see whether the combination, what is the essential character? Okay, what is giving the essential character to that combination? That will be the classification. I mean, take an example. Assume there is a pencil and a sharpener or a eraser. So it is the pencil which predominates, because without pencil, the other two are of no use, and that is how the classification is determined. So then we have the tiebreaker rule, or rule 3C, that if goods cannot be classified by following rule 3A or 3B, then the letter entry should prevail. So, there is equally, the goods are classifiable under two entries. Then you have to follow the letter entry. Okay. Then it may so happen that your goods are just not classifiable in any of the given chapter headings or any of the headings. Then you have to see rule 4, and at least in my life I haven't come across any example of rule 4, but yes, because tariff is so well prepared that almost all goods get covered somewhere or the other. But rule 4 talks about, it gives an option that appropriate heading of most akin goods, that means the similar goods. So if you have a goods which are not getting covered in anywhere else, then you see what is the most similar good which is getting covered in the tariff, and you classify your goods accordingly. Okay. Then rule 5, this is relating to the packaging. So packaging container and packaging material, this should be classified with goods, okay, with the main goods. So I'll give you example. For instance, you buy a binocular, you buy a camera, you buy a guitar, these all come with their own packaging, and these packaging are specifically manufactured as per shape and size of the product, which is the camera or the guitar or the binoculars in your case. And you use these packaging, you retain the packaging, you keep the goods in that packaging, and it has durability. That packaging has durability, and that every time you want to use, you will take out from the package and you will use the product again, keep it back in the package. Okay. So such packaging material is also classified along with the goods, because invariably they come with the goods. Okay. But if the packaging is sold separately, or it has its own separate, for instance, we have the 20 feet and 40 feet containers where all other goods are stored, or 200-liter drums. Now these are standard items where anything can be stored, or these have nothing to do with the specific goods. So these cannot be classified under rule 5. The packaging itself will go in its own chapter, or wherever the packaging can get classified. Then you will not look at the goods. Okay. I hope this is clear. I can give another example for this. Supposing you have a watch. Typically watch is worn, you don't keep in a package. Okay. But when you buy, the seller, definitely the shop, will give you in a case. And that case, after coming, you will discard the case, and you will continue to use the watch. But it may so happen you have 5 watches. You may buy a case which can store 5 watches. Now, but that case is not coming with any particular watch. So that case again is a separate packaging, which will be classified. The classification should be determined on its own. Then you have the rule 6, which talks about, it simply says that follow rule 1 to 5 in case for classification at subheading level. Okay. All rules apply mutatis mutandis in the same manner. So this is rule 6. So this is how you have to classify, how the classification needs to be done. I will just tell you the way forward, and then we will move on to question answer round, because there are many questions that have come, and I'll encourage that people who have any question, participants, they can post their questions even on the chat box, and we will do that. Also, in the question answer round, we will unmute you. You can ask your questions one by one, and we will take those questions. So what is the way forward? We have discussed, the criticality or the significance of classification, and also the implications of wrong classification. So it's no brainer. I mean, everybody knows that one has to classify correctly. Why? Because what you should take on a regular basis, at least our recommendation is that minimum once in every 3 years, you must take comprehensive review of your classification, because classifications keep on changing at times. There are new entries added, or section note, chapter note that can be added. So even if you have already got your classification reviewed, but the jurisprudence is evolving. Every time there is a new judgment, Supreme Court, etc., then believe me, it appears that as if we are learning every day something new, because when Westinghouse judgment came, there is a question also I've received on that. Uh, People learned a new thing. Okay, I mean, it shattered a lot of settled positions. So then you have to again go back and see how your classification is. Sometimes the notifications, people are taking benefit of notification, and that notification has certain language, and that interpretation of that notification can lead to consequences. So you have to determine all those. So it is very important that on a regular basis you are getting reviewed your classification from an expert. Okay, this requires proper thorough expert this thing, because some products you may need to look into the manufacturing process or the end use or the functionality, or various other facets like the technical their parameters, where the technical parameters are required to be followed, etc. So this is very, very critical. Okay, second is both for imported as well as domestic supplies, because this would apply, as I mentioned, IGST or GST or whatever the purpose is, for BCD everywhere. As a prudent business, what you can do is that if you have a revenue neutral transaction, okay, and you feel that you are not in agreement for a particular, supposing, especially I'm saying, if there is no impact on your basic custom duty, but IGST rate, department says you are liable to pay at 28%, you feel it is 18, but because you are eligible for ITC, input tax credit, at least pay under protest and claim refund and then fight the case, so that there is no liability for future interest and penalties and confiscation and all those risks, or your disruption in business, etc., is not there. So for revenue neutral transactions must adopt such a situation. Okay, then also you should have very clear communication with your customers to adopt conservative position where ITC is eligible. So sometimes, aggressive positions, while you may find that temporarily you may have advantage, competitive advantage, but when the demand or liability will come, that time it becomes very difficult to handle, because it erodes your bottom line. You have not planned for it, you have not provided for such liabilities, and all of a sudden you are faced with such consequences. Therefore it becomes very critical that you adopt conservative position, and wherever ITC is available or eligible, to your customer, to your supplier, wherever it is possible. If ITC is not available, then you must consult a professional, seek proper guidance and advice. Either you have to then see how you mitigate your risk. Okay, then where possible you can claim indemnity also from your vendors, in case because of their error any liability comes upon you or is fastened to you. So be clear on that aspect as well. But here I can tell you that supposing you are importing goods, because in some cases what happens is, for the customs purpose, it is what the importer in India is declaring. Okay, it is because importer who files bill of entry, he has to make declaration, he has to declare the correct classification in the bill of entry, and it is his declaration which is meaningful for the customs purpose. What the foreign supplier has declared, even if he has declared a wrong classification, that should not be followed. You cannot follow what supplier is declaring. You have to determine your own classification and declare in bill of entry. That is the critical aspect. Okay, and last is the, if there are doubts, if there is an industry issue, or you have a specific case where you are facing issues, you must file representations for customs before Central Board of Indirect Taxes and Customs, for GST related classification issues before GST Council, so that your representations can be addressed. And it's not easy, not always that they will address, but yes, there have been instances and we have done that, and it helps at times to determine the classification, or at least some clarification can be issued, which clears the doubt. Okay, so these are the to-dos and way forward, how in classification issues you should look into. I think with that we end. Thank you very much. Take care. Bye.